Greetings. Welcome to my weekend market recap, 11th February 2023. I am Sagar Nandi, retired IT professional, swing trading stocks using the Q systems and techniques that I develop. You may contact me using my email ID info@superiorprofit.co. I regularly share market and stock analysis using live systems on my website superiorprofit.co, Twitter handle Superior Profit, and YouTube channel Trading Profitably. All these channels are open to the public and you are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from Options Clearing Corporation to decide if options trading is suitable for you. Last week I had some issues with the audio system. I am checking if it is okay or not. On my monitor it is showing all right. If you joined the session live, you may kindly drop a message on the chat box on YouTube Live to tell if you are hearing me clearly and you are seeing my presentation clearly. Thank you for that. I use the Q systems in my trading. All the Q components run on the Metastock platform, and the technical analysis component runs on TradeStation as well. That was the last slide. Let's continue with the live systems. Starting with a look at the global markets, we'll start with Australia's All Ordinaries as usual. If you followed me in general, and if you followed me last week specifically, then you would know how I used the bearish headwinds to decide my preferred trading direction. Last week, all my shared ideas were on the short side. Probably 90%, if not 100%, of those trading ideas generated a profit. I will try to go through those ideas and review them. It is always a good idea to go back and see how I applied or you applied the Q analysis on the live systems and how it turned out. Now, with that note on headwind signal, the unique reversal signal, we can see that all ordinaries displayed the same reversal at the very top. In the daily, when it displayed the bearish reversal, that was the time to take a short trade, and after that it has nicely pulled back. That would have given a profitable bearish headwind short trade in all ordinaries. Is that a reversal setup? Yes, because even now all ordinaries in this area is in an uptrend. If you step back, of course it is in a sideways range, the range created by trendline support and trendline resistance, but in this area it was in an uptrend. The bearish reversal came at the very top, at which point we could take a short trade, and we could also take a short trade based on the extended condition, price being above the upper boundary. We could also look for short trade based on the jump thrust being at or near extreme high level, which was unsustainable. Now it has pulled back. Now there is no low risk shorting opportunity and there is no buy setup. So what is my conclusion? What is the trend for all ordinaries, it is inside a range. What is my preferred trading direction? None. Stand aside. Let's look at topics now. Japanese index. Topics is very indecisive. In the daily, we have a bearish indecision signal and it just exited the tip of the triangle pattern. Weekly also has a doji candle. It is at the upper boundary. It is overbought, shown by the stretch indicator. Therefore, if I want to choose a trading direction, that will be short side based on the bearish indecision, the overbought condition, and the fact that it is at upper boundary. On Friday, I would not short it, but next week, if it goes down, I may short topics. And as I prefer, short the weak fundamental constituent stocks that are also in weak industries. Next, China CSI 300. This is not extended, neither in terms of strange band indicator, nor in terms of price being above the upper boundary. It is in an uptrend. We have only trend line support, no trend line resistance. We also have higher lows and higher highs. It pulled back to the value area and now it is starting to go up. What is the trend? Uptrending. What is my preferred trading direction? Bullish. Again, I will not like to buy the index. I have the tools to find strong fundamental constituent stocks in strong industries. I'd like to buy them, and I will later demonstrate the exact same approach can be used, and I did use them in the USA market last week for taking bearish trades, and now I'm taking bullish trades. On Friday, I actually took a number of long trades. I'll explain how and why I did that. Next, India's Nifty 50, continuing with the global markets. It used to be the strongest of the global markets. What happened at the top? It displayed the very unique bearish headwind reversal signal in both weekly and daily. And in daily, it came to the level where a bearish headwind appeared earlier, tried to go up, created a false upside breakout and came down. So we had enough signals from this point onwards to protect profit in existing long positions and look for shorts, like go with flow trend following shorts at these points. Again, I would not like to short the index, Nifty index. I could and I did short constituent weak fundamental stocks. What is the current market state direction? It's sideways inside a range created by trendline resistance and support. I'm not going to buy or short. What is my preferred trading direction? Weekly has a very long-term support. It has a bullish indecision at the low. Therefore, I will like to take long trades provided the index can break out of this trendline resistance first and then the second trendline resistance. Do I have to wait for the second trendline resistance to break out? No. But then again, I am not going to buy Nifty itself. If it breaks out of the first trendline resistance, I look for strong fundamental stocks in strong industries and start buying them. In fact, even now, though it has not broken out yet, remember the headwind signal, that's a reversal signal. India market, multiple stocks are displaying bullish headwind reversal signals in last couple of days. So you could, in fact, take small positions in those stocks in last couple of days. Headwinds always give low risk entry opportunities, so there was no harm doing that. And you would, of course, again look for fundamentally strong stocks in strong industry. As far as Nifty is concerned, it's sideways, and I'll wait for the long breakout. That's my preferred trading direction, looking at the weekly trend line support. And lastly, FTSE index. It is in an uptrend, has trend line support, no trend line resistance. However, it is too close to the upper boundary, and we have multiple warning signals in last couple of days. Bear release, bearish indecision, bear release. Weekly has doji-like candle. Daily already hit jump thrust high. So I will be very cautious about taking new long trades in the UK market. Will I short? No, it is still in an uptrend. I'll have to wait for these trend lines to be broken, if they break, before considering short trades. But if the trend lines are broken, which will happen at price extreme high, at jump thrust high, I think there will be many lucrative shorting opportunities in individual stocks. Again, that's the kind of concept I used to short last week. I'll go through them, and you will see when many people were bullish, I shared and took only bearish trades and made a nice profit from that. We'll see that. So the global market has a mixed picture, some range bound, some bullish but extended. If we look at the global index as a whole, part of Q global market breadth, then we see it is range bound and right in the middle of the range, that is in no trading area. So global market as a whole is range bound, and it is underperforming the market. Why it is underperforming the market? Meaning it is underperforming the USA market, because USA market was going up. Let's look at the USA market now. Let's use TradeStation's Q Elite, starting with SPY. And you will see the USA market is not giving any buy idea if you look at the market. Neither in terms of external view, this market ETFs analysis that I am doing, nor in terms of market internal health check that I will do shortly. In the weekly, yellow candle, neutral color, indecisive shape, and we have a bear release signal along with a bearish indecision. That is not bullish. In the daily, traffic light candle color on Friday is still red. It did go up after opening down, but the traffic light candle color is still red. What is the direction? It is in an uptrend in the daily chart. So if I say, and you know that because it is all on Twitter, if I say last week I shorted 1, 2, 3, 4, 5, so I started shorting and sharing some of those ideas from previous Friday itself. How accurate was that? I could short right from the very top. It fell for 1, 2, 3, 4, 5, 6 days, and I closed all my short positions on Friday. Why did I close? Because those were swing trades and they had enough profit. I didn't want to risk them. Those were mostly, if not all, were options trades, and options can lose profit quickly if the market goes against them. I had a nice profit, so I closed all the short trades, and I did take some long trades. I'll come to the long trades later, but see how accurately I started shorting from 1 week ahead of others probably. Now others may be turning bearish, but I started buying. Otherwise, I tend to be a little bit ahead of many, if not a lot of other traders. QQQ weekly candle is bearish in color but bullish in shape. Daily is still in an uptrend. Friday's candle is indecisive. I started shorting from this point onward. How accurate was that? And I did book profit on Friday. QQQ also doesn't tell us to buy or short. Now both SPY and QQQ are actually in an uptrend. So if they go up now, they will be going up after a pullback in an uptrend that will give buying opportunities. There are buying opportunities now. DIA. This was and is continuing to be inside a range created by trendline resistance and support. There is no direction. We'll wait for it to break to the upside or downside before deciding what to do with DIA. Range bound. And IWM, this is also in an uptrend. Weekly candle bearish in shape, neutral in color. We have a bear release signal. Daily is an uptrend, but Friday's candle color is still red, though it recovered from the low of the day. Again, I started shorting right from the very top. I booked profit on Friday in the short trade. Other than DIA, the three market ETFs, IWM, SPY, QQQ, are still an uptrend. In an uptrend, they all pulled back to value area. If they go up, they will give attractive buying opportunities, especially in strong fundamental constituent stocks. The market ETFs themselves are not giving any buying setup yet, but getting close to that probably. We'll have to wait for that. If we look at the market internal health check using Q Global Market Breadth, we'll see there is no buying signal there also. Now let's look back and you will see the power of the Q systems taken together. Right on this day, when the Bango appeared, I mentioned that this is an euphoric buying. This was an euphoric buying like it was here. I term it as buy everything, even those of no value. From that point onwards, I started to look for shorting ideas. How did I find them? I found them using the unique bearish headwind reversal signal, and sometimes I combined the jump thrust extreme high level that is usually not sustainable. So I started looking for short trades. I shorted them. Now price has come down. The 3-month new high low was very close to the upper extreme, and when I drill down for NYSE Nasdaq, they hit the upper extreme, at least one of them, if not two. So that was another reason that I was confidently shorting. But now those line, that line, and also NYSE Nasdaq, if we want to look at that, we'll see that 3-month new high low. Let me clear that drawings. The 3-month new high low is here now, right in the middle, very close to the 50% level, neither at the higher level nor near the lower level. So it is not overbought anymore. If it goes up, that will give a buying signal. The yellow line, percentage of stocks above 50-day moving average, in fact, slightly went up on Friday. That will also signal a buying point if next week price starts to go up. Just like the external view, market ETF view, the internal view is also not telling us to buy yet, but telling us to get ready to buy at the market level. What kind of stocks are favored now? Small cap versus large cap. Went up, pulled back, but it is still having a higher low. So we will say objectively that it still has higher low, higher high. If it goes up next week, if it goes up next week, we'll favor buying small cap. What about growth versus value? Overall, it is in an uptrend now. So if it goes up next week, we'll favor growth. So growth plus small cap, that's a sweet spot for many traders. Those stocks tend to move a lot when they move. Lately, they are not doing very well, but if they start to move, you may look for buy setups from there. So external, internal, none of the views are telling us to buy. What about mega cap? Let's look at the mega cap tech index. Let's look back again. When mega caps were here, right in this area, I shared buying ideas in multiple stocks like Netflix, like Meta. They did very well. Both of them did. And then this custom index, mega cap tech index, hit jump thrust high. That would be a reason not to buy anymore. However, bullish others may be. Notice again, I am bullish when others are giving up. I actually shared Tesla also. Tesla, Netflix, Meta, 3 stocks I shared publicly right near the bottom. People were not buying. And when they went up using jump thrust high, I knew it was not a time to buy. Using bearish indecision at the top, I knew it was not a time to buy. The fact that it was well above the upper boundary, I knew it was not a time to buy. And the stretch band indicator also told it was overbought, not a time to buy. Then first came the bearish indecision, then the bearish headwind, then the bear release, then price pulled back a little bit. And that little bit pullback was enough for me to look into individual stocks, mega cap stocks, and look for shorting ideas. And I shared one of them, made a nice profit on them. The same stock that I had bought earlier, I shorted right at the top, shorted at the top, that I bought right at the bottom. Now it is in an uptrend. Pull back a little bit. If it goes up, that will give a sweet spot to buy mega caps again. Again, we see a signal to get ready to buy, but not yet because we don't have a buy setup yet in the mega cap tech index. Now let me go through all the tweets I shared last week. No pick and choose. That's not my style. All the tweets I posted before knowing the results as usual and see how they did. I will look at the tweet starting from the first one that I shared 1 week ago, Friday, February 3rd. I made a forum post. Which market ETF to use if you wanted to short the market? Let's look at the forum post. Look at the chart as it looked at the time I shared it. And then we'll look at the live charts. I will not go through the entire post. To save time, let's look at the chart or charts. In this case, I analyzed 2 market ETFs, IWM DIA And I did mention categorically, remember, unlike many other traders, I have no ifs and buts. If you are trying to impress people, if I'm trying to impress people, I can always make nice arguments about why the market should go up and why it may come down. There is no value in that from a trading perspective. A trader has to look at all the information and insights available to them and then make a decision based on the balance of probabilities. Am I going to buy? Am I going to short? Knowing or telling people that market can go up as well as it can go down because of so many reasons is of no value to a practical and actual trader. So I don't do that. I make a decision based on Q systems analysis, based on probabilities. What am I going to do? Where the lower risk entries are. And in this case, I categorically mentioned that I may favor IWM. In the weekend market recap that time, I mentioned that I took a short trade in IWM. Let's look at the chart when I shared it. Was there any bullish signal or bearish signal? Was there any bearish signal? No, there was none. The weekly was going up, weekly, daily for IWM. Daily was going up, but what I saw was some of the breadth indicators that I shared that time. You could look at them live using real-time systems, Q systems. And I showed that time that IWM was the only market ETF that had hit jump thrust high. And I know, if you are using Q systems, that is not sustainable, but it was still in an uptrend. In this case, and in general, when I'm taking a reversal trade, I prefer to use vertical options trades. So in this case, I used long put verticals. You could also use short call verticals. And that was when I took the trade, intraday, in fact, on Friday. Let's look at IWM now. We will see how I am analyzing unambiguously, making a decision, posting it confidently before knowing the results and how they are playing out. This is happening not only this week, week after week, month after month. That's the value of the systems you or I use. So I shared the bearish idea right at the top, Friday, 1 week ago. It has continued to come down since then. So my trade had a nice profit. I actually closed the trade. When you trade verticals, there is a saying, don't overstay the welcome period. I think the welcome period is already over. It has come down enough, covered much more than the risk distance. It was time to book the profit in the long put verticals, and I did that. The first tweet I shared, very straight, worked beautifully. Let's go to the next tweet. Close this, scroll up. In this tweet on February 3rd, I shared 3 stocks. Let's look at those charts. I did share the ticker symbols in Q Traders group. Also, a part of my website, and there is no fee to access that. All Q Traders have complimentary access to those clubs, one for USA, one for India for life. Now, let's see how I identified these stocks. What were these stocks? They were DNB, GE, and CMCSA, Comcast. Dun & Bradstreet, General Electric, Comcast. Which one was this? Let's look at the latest chart. Was it DNB? It was Comcast. Let's look at the post first. See, when I am sharing it, if you didn't have the Q symbols and signals, Q signals and setup, you would not find much reason to short it. But I did short it. What did I see? Bearish headwind, the same level where a bearish headwind came earlier, tried to go above that, came down, created a false upside breakout. That was happening at jump thrust high, came down with bear release signal. That was a low risk shorting opportunity. Was it in an uptrend? Yes. Headwind is a unique reversal signal and it can be a unique reversal trade setup. So Comcast was uptrending. Again, I traded using bearish verticals. I shared it on 3rd February. How is it today? Here is the live chart. I took the short and shared the idea right on this day. It has nicely pulled back, came and stopped where? Right at the trend line support. Again, for verticals options trade, don't overstay the welcome period. It has covered much more than risk distance. It came to trend line support, went up from there. I booked profit in the trade. Next one was DNB. This was DNB. Let's look at the stock. What did I see? Again, jump thrust high. Remember, the market was bullish and I was looking for extended stocks, jump thrust high, price extreme high, inside a Q volatility squeeze. Then came a bearish headwind, a second bearish headwind, bear release signal. You could short using intraday chart right on that day, or you could short waiting for the trend line support to be broken. I shared it in the afternoon session. If I am trading, of course, I place the trade before cutting, pasting all the charts, marking them, making a forum post, tweeting. So if I am trading, I trade first, then I share. So if I am sharing and the chart is looking like this, you know, if I had traded, I had traded a bit earlier. And of course, in this case, I did that using fine-tune real-time chart. That was the time I shared and shorted DNB. How is DNB today? DNB. I think that was DNB. Let's see. No? No, sorry. This was not DNB. So this must be GE. There were 3 stocks. GE. Let's look at GE. Yes, GE. So this was the day I shared the shorting idea. Again, I would have shorted using bearish verticals because it was in an uptrend. It was moving in an uptrend. This trade gave a small profit, not as large profit as the other trade so far, not as large profit as IWM, not as large profit as Comcast, but it gave a profit. And looking at the other trades, I didn't want to hold this trade also. I closed this also. G. Okay, and then the last one must be DNB. Yes, this is DNB, Dun and Bradstreet. See again how I analyze. Jump thrust high, bear release signal, bearish headwind, bearish indecision. Right when it was coming down, the day after the bearish headwind signal day, it was reversing from white direction line, creating a false upside breakout at the double top. I shorted this DNB. Let's see, it's DNB, right? DNB. 3 stocks I shared in the same tweet: Comcast, GE, and DNB. This is DNB, yes. The bearish headwind once again captured the very top, came down nicely. I had a good profit in the trade. DNB I probably shorted using stocks because the options were not liquid enough, if I remember correctly. shorted using stocks, I have booked profit in the trade. So the second tweet also worked. 100% trades profitable so far. By the way, I will share some long trades that I took this week. And you will see how I am applying the unambiguous analysis to the current market. Let's go up. On same day, February 3rd, I shared my next tweet on a stock that was breaking down. In this case, it was breaking down, and it gave a flow that is trend following short setup as well as a breakdown short setup. You could read that from the commentary also. This is how it looked at that time. What was this stock? This was a gold miner, and on that day gold mining industry was very weak. So I found this trading idea, shared it publicly. Let's look at the stock today, AU. I shared and shorted AU on this day. It didn't go down much, came to the yellow direction line and stopped, and it created a bullish indecision. It is still in an uptrend, came to the yellow direction line. If it goes up little bit next to it, it will give a pullback long setup. I had a small profit and I decided to close the trade with a profit, and that is part of trade management. I was discussing with one trader under what conditions I exit a trade. One is it hits the profit target. One, it hits the stop loss. Another is if my market directional view changes or my judgment on the stock changes. And as you trade more and more, you have a portfolio of stocks or options in your account. You not only look at your stocks, individual positions on your portfolio, sometimes you may just feel uneasy to hold shorts, you may close them. And that may happen. Why you may or I may feel uneasy is because we may start to take long trades. If I am taking long trades, of course, they can be in different industries going in different directions. But if the market has come down somewhat, the market ETFs are still mostly in an uptrend, you may not want to hold the shorts for too long. So in this case, also I closed the trade with a small profit on Friday, AU. So far, all trades in a profit. Some more, some less, that's fine. Let's look at the next tweet. No pick and choose. Meta. I am very good at picking the top, picking the bottom, and I did that once again with Meta. I had bought it at a lower price point, and this is a tweet I shared when it was at the very top. Shared it on 6th February. There was no bearish signal if you were not using Q systems. Hard to find bearish signals in a stock that was going up and then jumped up after blowout earnings. But what did I see? The stock came right to the trendline resistance. For 3 days in a row, it kept on displaying bearish indecision at the top. The trendline resistance was holding, and that was happening at jump thrust high, an unsustainable extended level at overbought condition shown by stretch indicator. So I shared the bearish idea. If you know my trading style, I would not buy it. So it was a short idea and it was in an uptrend. So again, I shorted using bearish verticals. That was then, isn't it? February 6th. And I booked profit in the trade. Let's look at Meta today. I shorted right on this day when it displayed three bearish indecisions in a row at trendline resistance at jump thrust high. Used bearish verticals, the stock has nicely come down. The stock is still in an uptrend, so I didn't want to risk my options position. Options profit zeroed very quickly if the stock goes against you or me. So I booked profit in this trade also. You see, when I'm taking reversal trades, I don't wait too long. Market is still in an uptrend. This stock is certainly in an uptrend. I picked the very top using Q signals, made a nice profit, closed the trade. So far, 100% of tweeted ideas are in a profit. Okay, let's continue. On 6th February, I also shared LE Financials. Similar pattern, very much in an uptrend. But it did break down in an uptrend, broke down below the trend line support with a bearish release signal that was happening at jump thrust high. Bear release signal. That was the time I shorted LE. I don't remember if LE's options were liquid enough. I might have shorted using stocks or maybe in options also. I don't remember clearly. Let's look at LE today. Okay, let's look at restation because I can see the historic trend lines. Those are broken now. LE Financials, ALLY. I shared the idea and shorted it right on this day. It has nicely come down after that. It is still in an uptrend, no doubt about that. So I had a profit in the trade. Friday's candle was indecisive. I did not want to hold bearish trades through the weekend when my market view is also not bearish. It's not bullish yet, but as I said, getting ready to buy. So there was not enough reason for me to hold on to the profitable short trade. So I booked profit in LE as well. Perfect timing, and I would say disciplined profit booking as well. Let's look at the next tweet. So far, 100% trades profitable. And notice all were in the bearish direction. Tata Steel was an Indian stock that was in a profit, but I will not look at the Indian stock. Somewhere on the market, not on stocks. Then I shared one idea on SQQQ. SQQQ. That was an intraday trade. I just look at the post, not look at the live chart. When I was looking at the market ETFs, I sometimes do trade the contra ETFs. SQQQ goes up, supercharged, reverse ETF. And I noticed in multiple time frames, and this was a 10-minute chart, real-time chart, it was breaking out of the trendline resistance. So you could buy it right at that time as a day trade. You could also buy it when it broke out of the early range high. I missed that opportunity. I did buy SQQ at this point, and I will not open SQQ now and try to find out how it looked like on the day after that. But that trade also made a profit. It was not a swing trade setup. It was a breakout long setup. Trend line breakout long setup, and you see many trend lines were there. When all of them were broken, that would be even more powerful breakout. You could take it earlier using early range breakout that I missed, but I closed this trade with a profit. It was a day trade. Next, I shared another trade that was on February 9th. Again, see the pattern. Jump thrust high, then came bearish headwind. I did not short it on that day. Next day, I saw it was starting to come down. This I'm sharing in the morning session. So again, if I'm sharing at 11:21 a.m. New York time, I would have, if I did short it, and I did short it, I would have shorted it sometime earlier. Now, Lyft's earnings were very close. And in any case, the stock was in a sharp uptrend. If you didn't apply the Q template, what was so bearish about it at that time? None. None really. Neither in weekly nor in daily. But I do have the Q template. So I saw it was unsustainable high level in jump thrust high and came the very unique bearish headwind signal. Also came the reversal candle, also came bear release. I waited the next day. I might have found it after the market close. During my daytime, I'm living in Thailand. I shorted it. I used verticals. It's uptrending stock. Lifts options were liquid, are liquid. Used verticals and I legged in. It happened to be in this case that I legged in. I don't always leg in. It's not a recommended technique or anything, but I was using intraday chart. So I bought the put first, long put leg first, and before the close of the day, I was already in some profit. I shorted the further out leg, making it long put verticals. I had very high reward risk ratio because of that, and because of my choice of strikes also. My long leg itself was slightly out of the money. In those cases, you will have very high reward risk ratio, not uncommon to have 1:2 reward risk ratio using verticals. Earnings was nearby. But that is okay for vertical trades in my view because verticals have defined risk. And in this case, I use the Q signals and earnings are always unpredictable. I got lucky in a way. I shared the short idea on this day during the day, took the short trade, held it. Next day, it dropped hugely. I think 30-35% or maybe even more. Again, what signal did I use before knowing the result? Jump thrust high. Then came a bearish headwind, a bearish reversal. I took a low risk trade, defined risk trade, made a huge profit. But the point is not about huge profit. If you see my trades, how I trade, it's not about making a lot of profit from one trade. Why I say that anyway, I'm not gambling. I'm never putting a lot of money in any one trade. So yes, this trade made a large profit in terms of percentage gain, in terms of risk taken in the trade. But as far as my account equity is concerned, one trade is not going to swing it either way, up or down, by a large percentage for the account equity as a whole. So it doesn't matter to me. I don't feel excited that Lyft made a huge drop. Even if I had traded it using stocks, which I would not before earnings, but even if I did that, I risk a small percentage of my total equity in a trade. Even if a trade makes 100% profit, doesn't alter my account equity so much. An individual trade. What is more important is success rate and keep on trading with that success rate with a reasonable reward risk ratio. That's the key thing. Reasonable reward risk ratio. So far 100% trades that I tweeted before knowing the results are in a profit. Let's see, did I tweet any more? I think one last day trade. Tesla. That was on Friday. Again, it was a day trade. And this is what I shared, multi-chart view of Tesla, daily, 30 minute, 10 minute, 10 minute. There are two 10-minute charts with different templates. If I'm day trading, it was a day trade because there was no swing short trade in the daily chart. If I'm day trading, I like to look at how the trailing stop is going up or coming down, going down for short trades. That's why we have, or I have, two 10-minute intervals, one for entry, one for looking at the stop level. So I noticed that as it was breaking below early range low, it was about to go down the trend line support, very useful in 10-minute interval and also in 30-minute interval. So I took a short trade. Tesla has liquid options. I took it using verticals and it was a day trade. So I closed the trade, Friday's trade that I shared, the last trade that I tweeted last week, also in a profit. 100% trades made a profit. Did I want to get 100% success rate? No, I think 60% success rate is good enough for me. And I always tell myself 60% success rate is enough because I don't want to put too much pressure on myself in terms of trading psychology. And if I try 60%, it ends up being 70, 80, 90, sometimes 100%. That's good for me. But all I'm trying is to get 60% success rate. That's part of my trading philosophy that I share. Dr. Jeffrey has a nice question. On Lyft, actually what happened, I actually did not notice that earnings was coming. So it happened that I saw the jump thrust high, bearish headwind. I took the put options first, but it was a very reversal trade at the very high. So I made it a vertical before the close. I got lucky, as I mentioned, that earnings was coming. Now, would I trade it if I knew earnings was coming? Yes, I would have traded it. And what I would have done, as I did in this case, happened to do the same thing, that I would have selected the strikes in a way that if it went against me, if Lyft jumped up, I would have risked maybe X dollar, but if it came down as it did, I would have gained $2. The signals work more often than not. So it is okay for me at least to take defined risk trades. I wouldn't trade knowingly before earnings using stocks, but verticals are fine. I wouldn't trade naked options also, neither long nor short before earnings, but verticals are okay in my experience. So I did that. Now, when I was looking at the USA market on Friday, I saw initially the market was going down a lot, especially NASDAQ. You would have known that if you were watching the market breadth using QLE real time. And let's have a quick look at it. I know I am at 1 hour point, but I think this analysis is useful to see how practically one trader is doing things, stuff, buying, shorting. So NASDAQ was coming down. This is QLE market breadth real time. This early range high low for E-mini futures. This is E-mini S&P 500 futures, NASDAQ futures, Dow futures, Russell futures. Now, if we see S&P 500, it moved up, down in a zigzag fashion, didn't really go below early range low, spent more time above early range high. And we could see in real time how the advanced decline was playing out, not really much below the 0 point, though it was having bearish up down volumes. So there was a mixed signal, but it was not bearish overall. Finally, price is king, isn't it? Volume is queen, but price is king. Now, NASDAQ displayed some bearish headwind in the intraday time frame, 10-minute here, made a sharp decline, however, went up and closed within the early range. That was bearish. Of course, if you look at the percentage change from previous day, it's bearish. S&P 500 closed bullishly. NASDAQ 100 closed bearishly, but it closed inside early range. That's not very bearish in my view. Yes, up down volume was down, but advanced decline recovered nicely near the close. Then comes the Dow futures, YM. Didn't really go below early range low, spent almost the whole day above early range high. Advanced decline was bullish, some selling. I think all the selling were late sellers. I'm not late seller. That's my hypothesis, but I don't trade based on that statement. I just saw that Dow was bullish, high bullish volume came in at the end, and anyway, advanced decline was also bullish throughout the day. Price pattern was bullish. Then Russell 2000 didn't really go below early range low, spent most of the day above early range high. Some selling, I think again, my hypothesis doesn't have much trading value for myself at least. It was late sellers. Advanced decline recovered near the close, and price is king. Price closed bullishly for IWM or Russell 2000, for Dow Jones Industrials, for S&P 500. And now you can understand probably a little bit more about why I closed my short trades, all of which were, other than AU, reversal short trades, and mostly using options trades, they erode profit quickly. That was one reason I am not going to continue holding the shorts. Now, why did I buy? There was no buying idea, not on the market ETFs or market internals. I'll come to that, but let's, before that, look at the market breadth now. Let's look at a bit more. What is happening inside the market? What was happening? This is QH, sector, industry, stock, advanced decline breadth. 1 month long-term period is still bullish. 10-day period turned bearish, continued bearish for the week. Today was also bearish, but Friday, across sectors, industries, and stocks, it turned bullish. So very long-term, 1 month period bullish, in the middle bearish, now bullish. That is what looks like a lucrative buy point. And the market ETFs mostly are in uptrend, except TAYA, and they pull back a little bit. They are also in a sweet spot for me to start buying. That was another reason I did not want to hold the short trades. And I, in fact, did some buying. Now, let's look at the bucket analysis. Remember, when the percentage of stocks above the upper Bollinger Bands, this percentage in the highest bucket, hit 50%. From that time, I stopped buying. I started shorting. Then I used jump thrust high. I used price extreme high. I used bearish headwind. I started shorting. And now that percentage of stocks above upper Bollinger Band is only 2.9%. That's a sweet spot to start buying. And where are the stocks now really? They're actually very close to a large number of stocks, not many of them, but most of the stocks are close to the mid Bollinger Band. You can see that this is the middle of 5 and 6 is mid Bollinger Band. So majority of stocks are near but above the mid Bollinger Band. That's a sweet spot to start buying. Overall, 54% of stocks are above mid Bollinger Band. That's bullish. So it is bullish pullback. That's a sweet spot to buy. That's what I saw. Now let's look at, by the way, I see a comment from Shomo. I think he will not mind. I don't usually share other traders' detail, but Shomo is one of the newer users of Q systems, and I have not seen many people mastering a system, whether it is Q or not, mastering a system and trading with that much discipline and rigor like Shomo. And the result is, of course, telling. But what I wanted to appreciate is the success rate is fine, the profit is fine. Those are outcomes. What Shomo showed, being a new trader, is how disciplined can one be. And in fact, when I started trading long time ago, I was nowhere as disciplined as Shomo was. Now it is I am, but I would like to appreciate that for Shomo. Good job, Shomo. 100% success rate, yes, I got it this week, but that was not required. And I don't strive for that. Now let's look at technical breadth. Unique tool, Q Finder. The weekly period is still bearish in terms of all signals, trend continuation, even reversals. And in fact, the percentage of bearish headwinds in the weekly interval is much above threshold of 1%. So that's a concern. So again, Viewfinder is also not telling me to buy. It's not all clear. Neither did external view ETF view or internal view health check. Now, when I look at daily Friday's picture, it's not overly bullish. In fact, all signals you can see more bearish than bullish, but that is because of a large percentage of strength signals, many of which, most of which are due to gap down. So if you excluded the gap downs, all signals would have turned bullish. There are trend continuation signals. Again, that's a sweet spot. We saw from bucket analysis, from market ETF analysis, from sector industry breadth analysis, we are nearing a sweet spot. In fact, at a sweet spot for buying. And I have many trend continuation signals. Those I could buy, look for buying. Reversal is bullish in terms of percentage, but absolute number of reversals are not much. If you exclude the gap downs, yes, reversals are large enough, 171 reversal. So we could look for buy setups. So weekly is still not clear, but daily is telling we could buy. Now I'm going to share several trades, and I did some extra work today in gradual preference of buying. Some of them I bought, some of them I found during my analysis. Let's look at, if I remember correctly, I went to the bullish signals and remember how I used bearish headwind. Now I am turning bullish, market pullback. So I looked at some of the stocks with bullish headwinds, 13 to be precise. And the first stock I checked, Teva, T-E-V-A, Teva Pharmaceuticals, went up by 4.48%. And what you can see from the finder, it's a price extreme middle. It has a reversal candle, possible headwind reversal setup, and a pullback setup. Remember again, everything is coming together. I saw from QH market breadth, sector industry stock breadth, from bucket analysis, from ETF analysis, from market breadth, that we are nearing a sweet spot. Pullback is a perfect setup that we may look for. And in this case, I also have one headwind. So let's look at the stock. Teva. Let's look at it using weekly, daily, both. So we can confirm the setup using the unambiguous checklist. And I know I'm taking a bit more time today, but I think it is worth it. You will see why I'm saying it is in successive degree of preference, that ideas I'm sharing. Now, yes, this has a pullback setup. Stock in an uptrend pullback to yellow direction line went up. It has a bullish headwind, but we don't have a headwind long setup because the weekly is not confirming the checklist conditions, and there is a trend line resistance not very far. So what could you do if you have a short position? And how could you short? You could probably short using the trend line resistance in the weekly, which meant you would have shorted near the very top in daily. Then you could book profit in that trade. Will I buy, or did I buy? No, Teva, I didn't buy. In fact, I ran finder and saw the stock, some of these stocks after the market close. But anyway, there is no confirmed headwind long setup. There is a pullback long possibility, but looking at the trend line, I wouldn't buy. Also, I looked at its fundamentals. Let's make a 360 degrees analysis and industry analysis. You will see why they are in successive degrees of my preference. Teva, doing the fundamental analysis now using Vital. Go to industry. Looking up the industry health using QH. Using graphical representation, I see that pharmaceuticals industry score is coming down. On Friday, it was negative. not an industry I'd like to buy. If I look at the scorecard, score is reducing and it has deceleration over 2-day period, top 20% deceleration. So that's not an industry I'd like to buy. So industry was also not telling me to buy. And as you know, I always share, I don't like to ignore the industry other than for biotech. Fundamentals I may ignore sometimes, and that too only for short trades, but industry strength I don't ignore unless it is for biotech. So Teva, neither the technicals are so interesting, not industry side also so interesting. Now let's look at the next stock, EC, and you may like this. EC, I like this stock. This is a stock in an uptrend. Came back to the yellow direction line, even more importantly, came to the trend line support, at which point it created two bullish indecisions in a row. As I mentioned, one is important. When cluster of them come together, we pay more attention. Went up from trend line support with bullish headwind. Weekly is neutral color, that is allowing to take a bullish headwind long setup. Probably also has a pullback long setup. Very low risk entry point. How is its fundamentals? You will see the degree, why I mentioned in increasing degree of preference. Great valuation for EC, very high earnings growth, very high revenue growth, funds are buying 100% of PR stocks, not one or two, 53 PR stocks in integrated oil and gas exploration product. They went up on Friday. That's an industry I like to buy. In itself, it was super strong. And in fact, it was a diamond buying candidate, undervalued with high earnings growth, high revenue growth, icing on the cake, funds are buying. Unusually high dividend yield. That may not be sustainable, but we have all other signals very bullish. And if I looked at the industry scorecard using QEdge, using a single click, that's an industry I like to buy. In the top 20% of all industries over 5-day, 2-day, 1-day, integrated oil and gas, there is high acceleration over 5-day period and massively went up by 3.39%. Yes, the market is telling me to get ready, but this industry and this stock is ready in my book and I bought it. I bought it using stocks. If I make a loss, that's fine. I'm not trying to get 100% success rate, though I got it last week. That's not my aim. My aim is to take high probability, low risk trades and keep taking them. EC was one of them. Now, this industry went up heavily, isn't it? 3.39%. And I bought several other stocks or about to buy several other stocks in the same industry. All my other ideas I am going to share today are in the same industry. One is SM Energy. Let's also look up its fundamentals. Same industry, so we know the industry is very strong. Let's look at the chart. Weekly backdrop turned bullish, very bullish shaped candle, created a double bottom, at which point many bullish indecisions came. First candle with bullish backdrop. Daily we have jump thrust low at price extreme low. Then came big move up 3. You already know. I already know. This is very high degree of success. Tesla was just one stock. It is about to break out of the trend line resistance. So you don't buy on Friday, I wouldn't buy. But if it breaks out on Monday, this is a low risk breakout. After the signals that has so far, very high degree of success. How is its fundamental? Undervalued, very high earnings growth. So it is a 3-star buying candidate in the same industry. Funds are buying. Company makes money. The oil gas stocks that are with fundamentals, nice fundamentals like this, they tend to make money. Unlike biotechs. Biotechs may go up without making money, but these are oil and gas exploration stocks. SM is getting ready for a very low risk entry point. One stock I bought, one more. You see, I bought in this industry. Another stock I bought is CRK. Multiple stocks, in fact, I bought from the same industry on Friday. CRK is another one. Once again, I'm sharing these analysis before knowing the results. Aim is not to show 100% success. I don't need that. Came near jump thrust low. Came near weekly bottom, created a double bottom. In fact, if you ignore the tails of this previous bottom, we have a double bottom with a bull release signal associated with very high volume in weekly. So in a way, in every way, in fact, weekly is giving a box long setup. The previous resistance is acting as support using the watermark pivot. And while that is happening in weekly, daily came near, actually came at jump thrust low, came inside a narrow triangle, very nicely broke out with bullish flow. Very bullish shape candle. It has a low risk entry point. That's key. Low risk entry point at double bottom in weekly. I took a long position again using stop. CRK's fundamentals. Valuation in the middle. 4% dividend yield. Secondary valuation grade. Has a short squeeze potential. Very high earnings growth. Very high revenue growth. Funds are buying. Insiders are buying. Industry is of course strong, same industry, all this stuff. So I took a long position in CRK also. I took a long position in another stock in the same industry on Friday. With that, I will stop today's session. After sharing that, let's look at that Metador, MTDR. Now in daily, it is inside a range created by trendline resistance and support. It is at the lower edge of the range, at which point it gave a bullish flow signal. In fact, a bullish flow. Trend following long setup. Weekly is meeting the checklist conditions. Weekly color is bullish. Risk is narrow. Stop is below the trendline support. Looking at weekly, I'm expecting it to break the trendline resistance in daily. But even if it doesn't, if it stops at the trendline resistance, I'll have enough profit as a percentage in the trade as relative to the risk. So I took a long position in Metador. Notice also we had big move up 3 after nearing jump thrust low. This is the first day we had big move up 3, then again big move up 3 on Friday. So I took a long position. How is its fundamentals? Not showing great valuation in Q scorecard, but very high earnings growth, very high revenue growth. Funds are accumulating, insiders are buying. Very strong industry. Of course, the company makes money, short squeeze potential. So these are the stocks I bought on Friday. EC, CRK, MTDR. Now, probably I would like to add one comment that if my market view is not bullish, why did I buy? Market view is not bullish, but this industry is very strong. 100% of peer stocks went up. That's a very strong industry. That was one reason. And all my longs that I took on Friday were in the same industry, at least the ones I'm talking about. There may be a few other stocks I bought. One thing that is common among all these stocks I bought, few things actually. First, they are all low risk. Second, they all have great fundamentals, either in terms of valuation or growth, sometimes in terms of both. And many of them funds are accumulating. Some insiders are buying, some has fantastic dividend. They are all great fundamental stocks in strong industry and low risk buying point. That's why I bought a number of stocks on Friday. You see how I shorted the market at the very top, waited for a pullback, right when it is getting ready for me to buy from the market angle. I'm actually already buying, but I am buying in the strongest industry or one of the strong, probably the strongest when 100% PR stocks went up on Friday. That is my trading style, always a little bit ahead of many others and not just taking any stock, taking high probability trades that are low risk, and they are working out very well. I mentioned to Shomo earlier, we have a group for Indian traders. My Indian results are also quite good enough for me. With that, let me end today's session. Thanks a lot for joining. By the way, there was a question from Dr. Jeffrey. Thanks, Dr. Jeffrey, for joining. I always learn from you. Many of the things I'm sharing, I have to mention once again that many of the things I'm sharing in Q systems evolved over time and evolved from input, suggestion, guidance of many traders. Dr. Jeffrey was the most instrumental in updating the system over time. Now it has stabilized to the point I don't change it much. But earlier I used to change quite a lot, and thanks Dr. Jeffrey for his input. So I always listen to Dr. Jeffrey's videos. High growth. let me look at the website. I have it favorite. I subscribe to Dr. Jeffrey's videos. This is the YouTube channel, youtube.com/JAS Cancer Doc. I think Jeffrey Scott. Okay. Dr. Jeffrey said high growth stock dot. So high growth stock. Anyway, I have it bookmarked, so you could probably not probably you are surely able to find it using this handle, this address, because I'm able to find that. So Dr. Jeffrey had a question. MSI. I'm not sure what MSI is. Is it a stock? Let's look at it. MSI. Motorola. Okay. I used to work in communications before I left work 10 years ago. This is looking great. Okay. This is looking great. Yes. And because Dr. Jeffrey mentioned MSI Motorola, let's look at it using the 3-chart template where I have the momentum signals, and we have the telltale signals that Dr. Jeffrey likes to use. 1, 2, 3, 4, 5 green dots. One is Bongo turned green, Bible gap up, Kahuna, Mobo breakout, pocket pivot. All of that happening inside a squeeze. I'm not a big breakout trader, so if you saw the ideas that I share today or share in general, I don't take breakouts unless they are low risk entry points. It's difference in style, not that it doesn't work, it's just difference in style. Now this has a Bible gap up, so if I bought it, I would try to put stop below the breakout point. Maybe the breakout happened due to earnings. I'm not sure it's earnings season, but this is a nice breakout. In Q, we have multiple bullish signals. Big move up 3, bullish pressure, very high volume. Of course, a trend line breakout, triangle breakout, possible go with flow long setup. Weekly is meeting the conditions, and also a breakout in weekly. If I look at the commentary, let's see what setups are suggested or mentioned in commentary. It's telling we have a breakout long setup as well as a possible trend following long setup, and it is uptrending. So this is of course a perfect breakout setup with 1, 2, 3, 4, 5 green dots on the daily chart. And if I look at its fundamentals, I used to work in Lucent Technologies at that time. It was the most widely held American stock ever at that time. Now the company as Lucent Technologies does not exist, but Motorola was not unknown to me. And this has enough fundamentals for me to buy. Let's look at its industry. Now, it may not be as strong as the oil and gas industry. Yes, because why I thought of that even before opening the industry scorecard, because the market is not that bullish. So the industry as a whole went down a little bit on Friday. The score is actually coming up. Not a lot, not a lot on Friday. It went down a little bit in score. Little bit. But the industry is down on Friday. But it is earnings season. If it had the gap up move due to earnings, there may be enough reasons to buy. Not my style. I would like to buy the oil and gas stocks that had great fundamental. If of course they're in different industry, but the oil and gas stocks had better fundamentals in a stronger industry, and for me they are giving low risk entry point. But having said that, many people follow same stocks regularly. MSI is looking quite good for that style of traders. Thanks a lot, Dr. Jeffrey, for sharing that. 5 green dots, a great buy from that point. With that, let me end today's session. Yes, it took 1.5 hours, but hopefully it was worth it. And these sessions help me also, helps me to remain disciplined. Thanks a lot for joining. I look forward to seeing you in my next session, most likely next weekend. Have a great weekend, and all these live sharings on YouTube, Tweet, my forum show. There is no reason not to do that. Trade profitably, and thank you again.